Hi, I'm Katrina and I'm the social media manager here at the Motley Fool. We're here to answer your investing questions, and I've got a batch in from Facebook and Twitter. I'm going to send them down to our analysts who answer them with their foolish opinions. Melissa from Facebook asks, what is a minimum amount of shares to buy in a stock? Is it better to buy 10 shares of a stock or $100 in shares?
Melissa, great question. The important thing to remember is there is no minimum for purchasing shares of stock in the stock market. There are a couple things to remember, which we'll talk about in a second. Fool co-founder Tom Gardner has said that the best time to get started investing was yesterday, and the next best time is today. So it's great that you're thinking about putting capital into the market and letting it ride over the long term to build your savings. A few things to keep in mind. Berkshire Hathaway trades right now, the A-class shares of Berkshire trade for over $120,000 per share. So a single share of Berkshire sets you back over 6 figures. So it's not about the number of shares, it's about how much capital you can put. And if you only have $100 or a couple $100, that's okay. There are a couple ways to get going even with that small amount. And the important thing to do is make it a habit. So if you have a couple $100 every month, put it to use. If you can sock it away in your IRA, if your company offers a 401k program, great. Make sure you utilize those tax sheltered investment vehicles and let those build your savings over the long term. Couple things to keep in mind. Number one, if you're buying stock through a discount brokerage, they often have account minimums. So some of them are as low as $500. Some are higher in the $1,000 or $2,000 range. You can check broker.fool.com to get more information on what some account minimums might be and whether you would qualify. Secondly, if you are buying through a discount brokerage, you want to keep your trading costs to 2% or less of your purchase price. So let's say you have $100 to invest in a particular stock and your discount broker charges you $10 as a trading commission. That's 10% of your purchase price. That's a little high. We recommend 2% or less. So either find other options for a broker or maybe wait until you have a little bit more money to put into a specific security. The final thing is you can actually buy shares of stock directly from companies through things called direct stock purchase programs or dividend reinvestment plans. These allow you to bypass brokerage commissions. You can often buy them in allotments of a single share. So if you wanted to buy one share of Coca-Cola, for example, has one such program, you can buy a single share of Coca-Cola and not pay a commission on it. You're buying it directly from the company, which is a nice way of getting started for a low allotment of money and gets you into the habit of saving, reinvesting the dividends, and building wealth over the long term.
And now we want to hear from you. Ask us your investing questions on Facebook and Twitter. You can go to facebook.com/themotleyfool or tweet @themotleyfool or use #AskAFool. I'll see you online.